All right, everybody. Good morning. Happy December. Good afternoon. Today is December the 1st, 2022. Where is time going? Thanks, Simpler, for allowing me to come in. We got a hour to go here, so we'll go over. Good morning. Good morning. Let's go ahead and go over the market as a whole. I'll kind of give you the information that I sent out in futures this morning, kind of some looks that I'm looking at. Unfortunately, as soon as I push something out, hey, thanks, I appreciate it. As soon as I push something out, we could see that I was a little concerned. I was like, I'm gonna push this out, and this is what happened to FedEx and Home Depot is that I pushed this out, and then it pushed up right before I could get my entry, you know. So I don't know if anyone's like front running my ideas or what, but if you could just kind of be patient and wait for me, okay? So we'll talk about that here in a few minutes when we get into Costco. Anytime I see something pull back like Costco, I immediately think opportunity, demand, right? Remember, guys, news is a catalyst that pushes price into demand and supply. What's really cool about being a supply and demand trader is that we're able to identify where we want to get in and out before the masses. The idea is that we are lining up with institutions. Again, my background, I attended OTA years and years ago in Denver, Colorado, met some amazing people, and just understanding what institutions do really like made the hairs on my arm stand up. Like really. And every time I tell this story, this morning, my neighbor, she came over. She's one of the top realtors here where I live in Florida. And she's like, you know what? I'm ready to trade with you. I've been thinking about it for like 6 months. She came over and I'm teaching her, and I'm telling her things, and I'm just like, man, I still have my hair stand up because it's amazing, it's powerful, and you can see the proof of concept. Unfortunately, this number I'm just kind of pulling out of the air, but it's probably about true. About 95% of traders are all trading the same exact way. They're all looking at free indicators. They're looking at the same thing that the majority of the market looks at in order to get in a trade and get out of a trade. And when you think about how institutions are and those people who are against us and algorithms and so forth, you can see and understand that they are looking at the same thing you're looking at, right? So, what is your strategy? If your strategy is lined up with what everybody else can see, if I have the bigger money, then I am able to take from you. Does everybody understand that? It's like a tug of war, right? Whoever has the most money wins in this game. Okay. Okay. So, think about this for a second. All right. If 95% of traders are all doing the same thing and institutions are sitting back and they're looking at the same moving averages, looking at the same resistance and support lines, looking at shapes, right? Head and shoulders, wedges, all these type of things, you can bet that there's another person on the other side of that trade that has more money who can squash that. Okay? So what we want to do is we want to be on the other end of that. I want you to think like an institution. I want you to identify levels where institutions are sitting at so that we can be on the side with the money. Okay? Now, again, we can identify these levels in the market on the charts just by looking at structure of candles. Okay. Today, I'm going to teach you about ES futures really quick. So, this is me going into today. ES futures are how I run my portfolio. Okay. So, I am net long. And the reason why I'm net long and on any pullback, I'm looking to get in. I'm not looking to short the market. For me personally, the risk to reward is not there yet. Okay. And I want to go over this blueprint that I've been trading this entire time. And I want to give you the insight of what I'm looking at and why it's working for us. Okay. Yeah, I have a YouTube channel. Yep, I sure do. All right. So let's go ahead and zoom in. Okay, let's go over this step by step. And then I promise we'll get into any other questions you guys may have. And some of you may have heard this before, but I need to reiterate it. Okay, it's not high insight. This is not high insight trading. This is what we call an inside and up formation. Okay, so this right here categorizes for me, this is going to be demand. What I want to be doing is going long out of this formation. And then I have my own proprietary indicators where I'm trimming and so forth. Okay. Then we have a cloud. This is just an EMA cloud. Everybody asked me in here, hey, John, what's the EMA cloud? It's a 9, 13, and 22. Now, 9, 13, and 22 for me works for my system for supply and demand. Okay. It may not work for you. But what I'll tell you is a lot of people use the 8, a lot of people use the 10. I don't really think there's a huge difference. These are the numbers that I like. Okay. The cloud is resistance until proven otherwise. Notice that price comes up into the cloud, it stalls a little bit. It comes to the next EMA, it stalls a little bit. And guess what happened yesterday? Yesterday, we pushed up over the cloud, and this is the first time that we have pushed over the cloud, folks, since right here, August. Okay, really July. Well, August, my apologies. August. Okay. Notice that we went inside and down on the formation. This is supply, folks. This is demand. Okay. Now, over here, we found demand on a monthly and a quarterly chart, and that's why we were looking to go long. Okay. Remember, I'm always looking at higher time frames and then coaching on the monthly, the weekly, the 4-hour, the daily, up to the 30-minute. And then we have our entries on the 5-minute PMZ or pre-market zone. Okay. So we have a supply zone and we have a demand zone. What I do know is that price travels from demand to supply. What I can't tell you is the timing. Timing is the variable. Everybody understand that? Timing is the variable. The only thing that we really can do is look at ATR, or average true range or trading range. And depending on what you're trading, let's say you're trading the SPY, it will give you that range. Okay. So for example, if I were to come over here to SPY, and I know you guys can't see my other chart. If I come over to SPY and I come into the daily, it's going to, let me see what the ATR is. Okay. I'm going to give you guys some math really quick. Now I'm looking for this target. And if you've been listening to me for the last several weeks or months, you know that I've stayed true to this. And I continue to trade this up towards this target. Okay. Now some easy math really quick. Every 10 points in the ES futures, okay, is $1 in the SPY. So the math right now, currently, we're at about 40.75. We're looking for 42.24. Subtract those, okay, and every 10 points, we're looking for $1 in the SPY. All right. So this morning we were looking for about 12. Now we're looking for about 14 bucks. Okay. So another $14 in the SPY. Now I like to give the equation if this, then that. So in this equation, because we are going from momentum, notice that the colors of my candles are changing. They're going from red to white. That's a good sign. Okay. Red to white. We'd like to see red to white to green. And notice down here on your TTM squeeze, we have higher lows on the yellow bars. Okay, right here. Boom. All of this is synergistically coming together, and the news is just a catalyst to move us there. What I know about the SPY, talking about the ATR, is that the monthly ATR is $34.50. The daily ATR right now is about $6.80. So timing is the variable. Do I know how long it will take for SPY to get up there? Not necessarily, but using ATR, I can assess it could be there by Friday. It could be there by Monday. I just don't know what catalyst in the market is going to push it there. Everybody understand? Okay. If this, then that. Well, what keeps me in the trade and what makes me break my confidence in the upside? Those are really important. I want to know, is the structure of the market creating demand below current price? Okay. Are we creating demand? So we know that we created demand back here. Okay. We created demand right here and we created demand right here. We're doing a very good job of creating demand, right? I think we are doing a really good job here. All right. Now, we are going inside and up. This is my support for today, folks. This is the market in a nutshell. If ES can sustain these levels, then I continue to look to the upside. My support for the rest of this week, folks, is 40.72 by 40.47. Okay. And really, I could come down just a little bit. Notice that our EMA is about 40.37. So I'm going to move that down just a tad. That's going to be our support levels for today. All right. So, great question. So, again, I cannot reiterate this enough. Anyone that knows me would tell you I have no TV source in my house except for Netflix, Prime, you know the normal. I do not watch the news. I do not look at econ data. Like I do not dissect it. Again, that is a news catalyst that pushes price to demand and supply. Yesterday, if you were able to follow along with me, okay, I presented my blueprint and it worked very, very well. Our demand level held. We hit the zone to the upside that I called the dovish Jerome zone, and I'll show you that here in a second. Okay, everything worked as planned. It's just a news catalyst. So again, I do not dissect news. I don't care about news. And in my personal life, I especially don't care about it. Just saying. As a trader, I am trying to teach how to be more mechanical and less emotional. If you put a lot of emphasis on news, econ data, in my eyes as a day trader, when I say day trader, I still swing trade, it will mess up my execution. And if you don't believe me, I want you to go back and think about the time that you took in an opinion or you listened to the news and you were completely wrong. But in the back of your mind, you were like, man, if I just would have stuck with the technicals, things would have worked out for me. Okay. Now, technicals aren't a 100%. We know that. Okay. I'm not saying that. But the probabilities are higher on a technical side than using news as a source to trade. That's just my opinion. Okay. Okay. So again, I'm looking, this was the resistance level I gave you guys at the end of the day yesterday. We hit that level this morning and we came in. Now, what do we do after a big push up? The market moves and sometimes it moves really big. When it does this, it digests. Okay. And I'm here to tell you, because I am a coach and a mentor to many people, that most people lose their money in the digest period. Seriously, this is where speculations are made of, not dreams. Speculations and speculations lead to more losses than most other trades. This has been my own experience and something that I've been able to watch over the years. Okay? Most people have a really hard time here. Why is that? Because price likes to digest between bullish channels within the range. And a lot of people fail to identify those bullish channels. And in many cases, the risk to reward is just not there. They create a bias. They go to different news sources and they come into the market and they just tend to watch during the biggest rallies they've seen, and unfortunately are deer in the headlights and cannot execute a trade. That is what news will do to you. That econ data and everything you read into, in my opinion, keeps you from making the trade. Okay. In this digest period, what do we want to do? It's a if this and that. If price can hold these levels, I'm looking for this. If price can do that, then I'm looking for that, right? It's pretty straightforward. All right. So this morning, I find myself seeing that Costco is pulling back. Okay. I'm still in Google for anyone that's, heard me. I'm up 161% with 50 days left. Okay. 160%. We've been holding these. I was accumulating these when the rest of the market was in fear. And I want to show you why I was buying that, but I'll get to that in a few minutes after we cover Costco. Okay? After we cover Costco. Okay? Yeah, so I definitely DSI, so I send that out every Sunday. And I use free resources for that. So the reason why I do that is that I feel it would be uh, it's just something that people want to look at to know the times. Okay? But that doesn't keep me from trading during those times, just to be very transparent. Those are my favorite days. I said that yesterday. Absolutely my favorite time to trade. Okay. Yeah, those are my favorite. We pick out the supply and demand before the news catalyst, and then I'm pushing out that information. And then we're going long in the zones and going short in the zones if everything sets up. Okay. So let's go ahead and fast forward. So if we go over here, okay, this was yesterday's blueprint that I pushed out here at Simpler. Okay, I want you guys to take that in just for a few minutes. Okay, I created this blueprint before the week started. Okay, this zone down here, this 30-minute zone right here, this is the zone that we used last week, and it worked really, really well. Yesterday, coming into the event, we pulled back into demand. Okay, and we held demand the entire time. This is a 4-hour candle, therefore I'm committed to the closes of the 4 hours, and they are telling me in that we were accumulating in demand. We got a news catalyst that then pushed us to supply. Okay? Portfolio stayed long, folks. Portfolio stayed long, trimming into these levels up here. So we're trimming into these levels up here. Okay? We did not pull down into what I considered the hawkish Jerome zone, right? We didn't pull back into there, unfortunately. So it didn't really get that opportunity to buy a really deep dip. Just kind of took off from us. Okay. And then, of course, on the 5 minute, okay, this is what we have today. We trade the PMZ, the pre-market zone. It was good for about 7 points to the upside, and to the downside, you guys can see the results as soon as it breaks down below the PMZ, pays very handsomely to the downside. Okay, that's ES futures in a nutshell for today and for the week. All right. So if you guys need that blueprint, I did send it out yesterday at the end of the day. You should be able to archive it if you need to, but if not, I'm happy to place it here. Okay. Now I want to go over a couple things with you. What are some of the trades that we've taken in the last several days and weeks? FedEx, let's go over these. These are really important because I want you to understand what happened. Most of the trades to the upside, which you're going to see, is a box. You're going to see an arrow, and I'm going to say, hey guys, I'm waiting for this zone. Not all the time do I wait for price to come into the zone. There are a lot of different things that I'm looking at. How are the ES futures reacting to my levels? How is the market acting? Where are we at? Are we in demand? Is my bias to the upside? Therefore, I want to buy a dip. So you'll get charts that look like this when I tell you something's on watch. Notice when I push this out, we were currently on FTX. We were sitting about right here. Okay. We waited very patiently for almost 2 days. We waited for price to get down here. I figured, hey, guess what? Price is very close to my level. Let's go ahead and take that trade. And you'll see here that price did push from our entry of about 172 all the way into 178 and very close to the 184 target here on FTX. Okay. Now, remember, I'm using higher time frames to get into these trades. Okay. All right. So the weekly, when I look at FDX, is amazing. Looks beautiful. Okay. Absolutely beautiful. And it's very close to the next target. Matter of fact, I like 200 on FDX and may look to get back into this trade. Okay. Notice the higher yellow bars here on the weekly as well on the TTM squeeze. I love that. Now let's go over here into HD. Check out HD, up $2 today. Same exact story, folks. And this one worked out really well for us, didn't it? It came into the zone perfectly. We stayed very, very patient. It's not easy being patient, is it? Right? But check it out. Again, another proof of concept. This is what I tell people. Folks, what I teach you is something that you can use for the rest of your life. My alerts are proof of concept. What that means is whether I win or lose a trade, I'm going to do what I say I'm going to do. If I tell you I'm going to buy in that box and things set up, I'm going to buy in that box. Simple as that. When I take a trade, it's very important to understand that I am saying to myself, I am willing to use, okay, or lose X amount of money. Everybody understand that. Matter of fact, I told you my neighbor came over this morning and I sat down with her and had some coffee. And one of the first things I tell people when they want to be coached or mentored or whatever is I want you to come up with a number. And she said, okay. And I said, I need to know what your number is that you are willing to lose every trade you take. Okay. And usually people, they tend to always say the same thing. They really do at first. They're like, I'm willing to lose $500 or I'm willing to lose $1,000. That's like the majority of traders. And then I ask them politely, please cut that in half. Okay. So what this means is every time we take a trade intraday, because we're good stewards of our money, is we want to control the losses. And the only time we can control them is when the market's open, just to understand that. If you take options overnight or you take equity, in most cases, you cannot control the loss. Therefore, if you're going home with that trade, understand you could lose the entire position. Okay? But what I like to teach is from an intraday perspective, because that's really where your heart is at. You're really going to judge yourself by looking at your PL for the day or the percentage of that option. And you're going to say to yourself, am I doing good or am I doing bad? We look at things different. We do process over percentage during the day. What does this mean? This means in this case, when I take this trade out of the zone, okay, when I take this trade out of the zone, what does that mean? It means I already know how much I'm going to lose. I'm comfortable with that. And so I stay in that trade unless I lose that amount of money, right? Or if I hit a target or whatever, whatever it's going to be, I got to stick to my rules. All right. It makes you feel much more confident having a blueprint. I'm saying this from my perspective. This is the way that I like to trade. I like to identify entry, stops, and exits before I take a trade because I can really resonate with that. When I first started trading, I didn't have that type of coaching, and I found myself always being confused and not having a plan of execution, and it really hurt. If you could tell yourself and come up with a number right now, I would encourage you to write it down right now in your journal by your desk and try your hardest to trade with that number and become more mechanical, less emotional. Okay? That's the first step. The second thing is getting to targets. And I know some people have different views on targets, but we use supply and demand for targets. And supply and demand work. It's something that's been working since the inception of the market. That means if we go all the way back on any chart you pull up to me or you ask me to look at, I could tell you where price will stop and go. It's true. Okay? And we can do this And we could do this now and we could see it into the future. That's where supply and demand come into. That's what's so neat about the process. Now, disclaimer, sometimes zones don't work. I always tell people on higher time frames, um, if we're identifying demand and supply zones on monthly charts, the only time, and it happens about 2 to 3 times a year, we always have a catalyst in the market, don't we? We have COVID, we had Brexit, you had North Korea, you have all these events that happen a couple times a year, and you can pretty much guarantee in most cases your zones will be sliced through like butter. Okay, we do have those big macro uh, events that happen that can absolutely go through supply and demand. Okay, that will definitely happen. Do I scale out of? Yes, 1000%, Tony. Yep. Trim and trail, man. Trim and trail. Trim and trail. Okay. Okay. That's what the lines are for, right? And so, for example, I took AMD this morning on equity, same thing, trim and trail, trim and trail. Google, I'm doing the same thing. Still have several contracts left, just trimming and trailing. Okay. Now on stops, it's a different story. I just take my stop and move on. Okay. Very mechanical. All right. Yes, I definitely am, Ken. 100%, man. We're going to get to that here in a second. It's a little frustrating that it moved about $8 from the period that I was looking at. And I actually said on the backside, I said, I have a feeling this thing's going to move as soon as I push this out. So it kind of put me in the same position as HD and FDX, trying to be patient, but yeah. So let's just really quick again on HD. Let me go to a higher time frame. Remember, why did I take this trade? Can anybody tell me here at Simpler? Right? I know that at Trendy Trading, we'd obviously know why I took this trade, but can you see why I took the trade when we look at this? Can you guys see that? Why did I take the trade? So, real quick, supply is not to the downside, folks. Demand is to the downside. Okay? Supply is at the top. I know it gets a little confusing for people who when they first just think of demand as like a clearance rack. This is where people want to buy. We have demand to buy that product. We have demand to buy HD in a demand zone. Okay. So right down here, this is an inside and up formation. I identified that on a higher time frame. I told you guys, hey, let's wait for this candle to pull back into this zone. And now you can see the result of that inside and up formation. Matter of fact, 314 and a 327 is nothing to you know pass up on. Pretty nice little trade there. Okay. So just want to show you the bigger picture. Now let's go ahead and get into cost. COST and see what's going on. All right. So the first thing that happens when I am teaching is if you have a name that takes a big pullback, again, I don't care about the catalyst. Catalyst is the reason it pulled back. In my mind, Costco is going nowhere. We all know that. Okay. So, regardless of the reason that it pulled back today, I think like an institution. I want to identify demand and I want to look at the events that are coming up. What are some of the things that we know about Costco? Okay. Well, if we come down here, we have earnings on the 8th, right? We have earnings on the 8th. So, in my mind, the catalyst is a catalyst to push price into demand before the event. Whether you want to say it's Christmas, whether you want to say it was Black Friday is over, whether you want to say it's earnings. So that's the first idea is I want to come over here and I want to look down and to the left and I want to see if we have something, okay, that says, hey, I might want to take a shot here. Notice that we have a gap fill below. Okay. We have a gap fill below, but we also have formations here telling me, okay, to get long. And without going into too much detail, these are all inside candles and up. And the reason why some people would not see this right away, and I don't know how many demand and supply traders we have in here, but this is an inside and up formation. The formation actually comes in right around here, and you can see that price did come down to there after the catalyst. Okay. And again, since I pushed out that watch, it has it has pushed, right? And I'm trying not to chase it because I feel like I could get prices cheaper either by the end of the day or into tomorrow. Okay. So I'm very patient. And I live here in Florida, and I like to give this reasoning behind things, and this is what I was teaching this morning as well. Actually, a little bit of background about me. You guys know I was in the Air Force for 21 years. I then became a director for a really big company out of Texas, and then I opened up my business here, doing what I do, and that is trading. And before that, when I was a teenager, I actually lived here in Florida. My father was stationed here, and I used to surf for a team right here, right where I live. And I still go visit those guys. So I love surfing. We actually go to Maui once a year. I surf out there. I'm very one with the ocean, if you will. And when I hear people talk about the ocean and surfers and talk about trading, I have to tell you, I can really resonate with that. Okay. So I want to give you a picture. I don't think a lot of people talk about this. You'll hear about like, hey, the ocean doesn't know you're there. Okay. But I want you to close your eyes and just kind of picture this for a moment. If you go out to the beach, if you guys get lucky enough to go to a beach, if you live on a beach and you get to watch surfers, notice what they do. Your beginner surfer or people that are trying to learn, they'll be sitting out there and they're waiting for swells and sets to come in. And unfortunately, they'll look to the left or the right. They'll start to see these swells and sets come in, and then they start gravitating. They start paddling, right? They're paddling, paddling, and paddling. And by the time they get there, the waves are gone. And then they look back to where they were just sitting, and now the waves are breaking over there. And then you see them paddling back and forth. And then you have the advanced surfers, those guys and gals who are hanging out in the ocean, just kind of chilling, just washing the water, and they just stay and they wait for their perfect wave. There's no paddling, nothing that really they need to do. They just been patient, they waited, boom, they catch the wave of their life. That's what we're doing in supply and demand. And that's what I'm trying to currently do while I'm sitting here waiting for Costco to patiently set up so we can ride that wave. Okay. So that's what I'm doing right now. And that's coming from a surfer to you. And I promise you, I know what both feels like. All right. So we're going to sit here. We're going to stay patient. Now, one thing I will tell you with this gap down is one tool that you can use. You can take the gap down, okay, and you can measure it. And if let's go to a smaller time frame. Actually, give me 1 second here. Let's go to a 5 minute. All right, we're gonna find. So I use what's called a line in the sand. It's not the same as a cash close, and we're going to come down to. We're going to use some fibs. We're going to come down from the line in the sand to the pivot low. Sorry, just like that. Okay, and we're going to zoom in. I want you to notice something. I teach you guys about the 23 and 38, and it's very, very important to also relate to the downside. So, what I notice in a downside move since the inception of the market is that when things pull back, they are still in a bearish channel as long as price can't hold or push over the 23 and the 38. Okay, very straightforward. So this is what keeps me patient on Costco. Notice how that 23.6 is continuously being resistance. I don't want to be in the trade. I don't want to chase this trade, and this will keep me from chasing a trade. And this is a really awesome approach that, in many, many cases, saves me money. Okay, so I'm going to continue to stay patient. Now let's talk about how we figure out where targets and so forth are going to happen. Okay, so on a 4 hour, this was the blueprint that I sent out to you guys, and let's just take a look here. All right, these are arrows, and what I'm trying to show you is that I would expect price to come in here and go sideways for a bit because the overall sentiment is down. All right. And so it takes a little bit of conviction in here for people to start feeling a little bit better about taking the trade to the upside. The problem is that the majority of traders wait for too much confirmation before they get long. This is a true fact. Okay. They're looking at volume, they're looking at EMAs, they're trying to figure out if unusual options activity is somebody bought a bunch of contracts. There's like 20 things they're looking at. And to actually make this a little bit easier, is all you have to do is pay attention to the TTM squeeze, believe it or not. Okay. So what I do is I wait for my level. Okay. And when my alert goes off, I'm going to go over to the smaller time frame, and then I'm going to watch the TTM squeeze. What I expect is for price to push down into these levels. And let me go ahead and show you what I would expect to see here on the TTM squeeze. Okay. These bars here would start to go red. Okay. They would start to go red. My alert goes off maybe somewhere around here. I watch patiently, smaller time frame, and then I start to see yellow bars. Once I start to see higher lows on the yellow bar, I'm entering for my entry into that long-term trade. So what I do is I identify demand and supply, whether I go short or long, folks. I don't have a problem doing either. I'm identifying demand in this situation. I know I want to get long. The catalyst was something of a beauty of nature for me because I like this particular stock, and I'm talking about anything that I'm looking like FedEx, HD. I like the stock. I'm not biased. I found a level. I waited, and now I'm using the TTM squeeze to help me understand that the selling pressure is easing off. Okay. Okay. That's all. It's all on my YouTube page. Okay. So this is what I'm looking for down here. All right. Now, far as targets to the upside, okay, I can do Fibonacci's, okay, and I can look at range. All right. I could take this range candle here, okay, and I can measure down to where I'm getting long, and I can go ahead and identify levels where I want to get out. Now, I'm not going to take you through the whole process, but I break down these candles just to ensure that structure is at my targets to identify that those targets are indeed great targets for me to use. Okay. Okay. Good. I hope the ES keeps going down. If it keeps going down, it'll give me possibly this potential entry here on Costco. So, yeah, very, very, yeah. All right. So these would be the targets, and like I said, I start breaking down different time frames, and then I'm looking for structure around those targets. All right, and you can see, you start finding structure. Like there's an inside and down formation here, but I have a target right there, so I could actually come up here and move this target to there, and so forth. Okay, but again, I won't get too much into that right now. All right. So again, keep my fingers crossed we get this entry down here. But please, as I said, just like HD and FTX. Just because it comes in the zone doesn't mean I'm going to enter. Okay, things have to line up. All right. All right. So, and if they line up, because I put the trade out here. Okay. Oh, that's awesome, Ken. Good job, man. I hope so. Yep. All right. So, moving on. Now let's go ahead and get into like some fun, right? So, what do I want to trade right now? There's always something to trade. All right. So we'll pull up this. So I have scanners. All right. And this is my PMZ scanner. This is my 5 minute entry. This is kind of so our edges identify supply and demand, a playing field of supply and demand. That's what the trendy edges are. Okay. The cloud is a EMA cloud that is pretty robust. It has buy and sell signals in it. It changes colors. The candles changes colors. There's momentum. There's a lot of like different code behind it. And then pretty straightforward. My PMZ or the pre-market zone is really, we're pretty known for because these type of trades can generate very quick income on the intraday. Today's trade, I took Netflix. Okay. And so I'll go over that with you really quick and kind of show you. And I also took AMD. All right. So Netflix, this one, I'll kind of show you what's going on there with the PMZ. And sorry, I put this on the wrong time frame. There we go. All right, so the PMZ is really straightforward. So if this is your first time listening, it's very straightforward. Long over the top, short underneath. It really is like that. However, before we do that, we take into consideration the overall trend. What would you say by looking at Netflix? What is the overall trend, folks? Right here. What is our trend? From a 5 minute perspective, what is our trend? Bullish, right? Very straightforward. I think most of you guys should be able to tell that. Okay. So when I find a name that I want to trade on the morning, I have to assess it. And I just go back a couple days. Okay. I will, I should back up on that. I have this knack. I have to look at monthly and weekly charts before I do anything. But on this 5 minute trade, I know that I'm bullish. I look back, see this level right here. This is a trendy edge. We can see that Netflix is holding that edge. That's a positive for me. And so I know I want to be getting long. So we get into the 5 minute right here. Okay. And this chart itself, this is your PMZ or the pre-market zone. Remember, it tells me the risk. The risk today is 80 cents. Okay. And my reward is going to be automated targets to the upside. Now we had an inside and down formation at 307. So my reward would be going long at 305, trimming at 307. You can see some of the quant pivots also that are working well. And I have some automated targets to the right, 317. Okay. Now check this out while we're sitting here and just kind of talking about this. Let's go ahead and measure, okay, from here to here and just kind of use some Fibonacci really quick. All right, so we have, if I zoom in here, we have some inside and up formations support down at the 38.2. That lets me know that the overall this overall trend is bullish for right now. And what I'm going to do is use the 50 and just kind of come up right underneath structure. And what I would expect here is for price to come down into this zone. Okay. And I would expect to find buyers here. Now, understand that we are past the European close. This is a really dull time for me. I trimmed like I told you guys this morning, trimmed my Google. And then I was in and out of Netflix very quickly, made money there. You guys could see the move was very fast. Um, I could have held longer, that's for sure. Those options went up 100% from 250 to 5, I believe. But this right here, so this is just Fibonacci. I want to show this to you, okay? So again, my expectation is that price is going to pull back into this zone, okay? And what we can do is we can assess how this works out on a smaller time frame. Notice that the TTM squeeze is doing exactly what I was telling you I look for when price is pulling back. That should be pretty straightforward. Prices, we have red bars here. and I would expect those to continue into the zone, and then we'll look to see if we get any yellow bars. Okay. The TTM, sorry, the PMZ signals, again, I have them over here. So I can quickly click on things and I can get there and trade out of the PMZ or below the PMZ. Um, indicators are pretty much for people who, it's for convenience. You want to be able to not have to go through a lot of charts and stuff like that. And that's why we come up with them. So, okay. How do you get your signals and do you get the screens that you're looking at currently? Thanks. My stuff's all out there on my website. Um, but what you're seeing here, so I identified these zones that I'm doing right in front of you guys. I currently have quant pivots on and I'm using them from a 4 hour and a weekly, and I use those as automated targets only. But as far as like my levels and my indicators, they're like any other indicator. They pop up on your screen every day. So like the PMZ is automatic, the risk is automatic. I also have a really cool risk calculator where I can plug in my net liquid of my account, and I could tell it like, hey, I only want to spend 1%, you know. DSI, that's a good question. Yeah. All right, so we just sit here and wait patiently. And if you guys have any other questions like about anything, you can ask in here while we're sitting here waiting. Just want to show you what this looks like. I think one of the hardest things though is you have to be really patient. A lot of people unfortunately are not very patient. Okay. And sure, let's go over to ENPH. I'm going to pull up my trading view. So I also have, obviously um, use my indicators on trading view. And let's go ahead and take a look here. Let's bring this over here. All right, so this is EMPH. We have the TTM squeeze down here. All right, check that out. And from a weekly perspective, this is what I would consider, kind of like an inverted head and shoulders, right? If you're into that, all right. I'm not, but we do identify this, and you can see that here. And you can pull this up. It looks really bullish. We had an inside and up formation that looked really good. Somebody asked me for this not too long ago, it looks like. The trigger long worked really well. All right. And what we do from this is we want to go into a monthly and a weekly. Let's go right here. Yeah. So this looks like that. All right. And so what you need, because you do not have supply up and to the left, there's no supply, guys. So what you have to use is what we call um, the fibs. So you want to use the fib extensions. And let's go ahead and remove these drawings really quick. So without getting into, again, too much information, because I could be here forever, but your fib extensions, people always ask me, hey, John, where do you put your fib extensions? You have to understand like what is your time frame for the trade. See, if I were to start a fib extension from here to here, that's a very wide range, okay? That means my 23.6 is going to be really far away. So if you're not looking for a long-term trade, you do not want to use these pivots as a fib extension. Let me kind of show you what I'm talking about. If I take the fib extension and I come down here at this pivot and then I double click at the highs, my 23.6 is at 345. Let's just go ahead and identify that, okay? Again, this is where ATR comes into place. So on ENPH, okay, when looking at this, I want to get an idea of the ATR. No, NTX, you haven't missed Costco. We're still waiting. I went over it, yes, but I have not entered or anything like that. So EMPH, the monthly ATR is 52. Current price is trading at 316, right? Add another 50 to that, and then you're looking at 66. Okay. So our target here is not out of question. All right. But notice if I take the fib extensions and I use this pivot and I come up to the pivot high, then we have a new target. Okay. And what we can do, if anybody uses TradingView, I like to give out little tips and tricks all the time. Guys, all you have to do is click on something, hit control, keep the control button down, and then it duplicates anything you want to do. You can literally duplicate any of this stuff. See that? I just click control and you can do that kind of stuff. Anyways, that was like a blessing when I learned that. So anyways, I would put these on here and these would be my targets to the upside. Okay. So I would do something like this. And then I have all these different settings. I've already created all of these templates to make it a little bit more um, so you can see right here. All right. And then your support for this trade, I'm actually just going to use some fibs. There are some inside and up formations in there, but I'm going to use this. Notice how we're holding the 38.2. So for me, for this, I'm going to use the 23.6. We're going to click on this, settings, make this your support right there. And this is what I see. And when I do stuff like that, I could give myself a risk to reward. You see what I'm saying? So it's like, hey, 309 I want to hold, but I want 338 by 345. Okay? That would be a trade plan. All right. Now, I personally like things when they pull back. You guys heard me on one of my alerts before. I prefer pullbacks over breakouts. Okay? Especially in this market, right? You guys agree with that? And see how we're sitting here? This is the part that I really want to make you comfortable with. See how, like, my analysis, what I'm talking about, we're using Fibonacci, we're using supply and demand. The market's swinging from 15 to positive to down 17, but the whole time, nothing's really happening. So if you're a day trader, cool, we teach that, right? We teach how to scalp in and out, but I really like to be at a very free state of mind trading, as Mark Douglas would say. I'm very chill. I'm very confident in the levels. I understand what's happening with price. What I cannot predict is what's going to happen after a catalyst. I just know that catalyst will push price in direction of my entry or my trim, right? Damn phone rang. I like that. CRM is interesting. Yeah, we could take a look at that really quick. So this would be your blueprint. Okay, so I'll go ahead and put this out there for you. So let's go ahead and put that in there. Control V. Boom. There's some EMPH for you. And let's go ahead and come over here and look at CRM. Okay, here's CRM. Current price is at 144.63. Now the question here is it coming into demand? Okay, let's go to a quarterly. And quarterly, it's in demand. Me personally, okay, me personally, I'd rather try down here towards the bottom. That's just me. And I'm not interested in long unless it can get back over 150. That's my 2 cents. Okay, that's my 2 cents for right now. All right. Definitely looks like a look like we could build a shoulder out of this demand. Okay. And no, I trade live. So I'm a guest trader, guys. I have my own business and so forth. And I've been here for almost 5 months with you guys. So, yeah. Hey, thanks, Jimmy. I appreciate it. Yeah, so before we end here, man, I do a lot of talking. I really do. And sometimes, I tell my wife, I just The biggest thing for me is making everyone understand every trader in this room is great, okay, including you. What I have found over the years is that I want people to learn how to fish. I really do. I sincerely care about people's success. Again, my alerts are for proof of concept. I do what I say. That's it. Okay. These are my entries. These are my trims. These are my stops. I want to share that with you to help you understand that I trade my strategy. Okay. One thing that I learned in the beginning and for many, many years is that I wouldn't execute my strategy. And I had to figure out what it was that was keeping me from doing that. And that's what I shared with you guys this morning is that one, I didn't understand what I was willing to lose. Two, I didn't really have a process. I didn't know where I wanted to get in. I didn't know where I wanted to get out. Those type of things. In the long run, this builds consistency. The thing that I try to teach everybody is be consistent, folks. I have what we call a journal trading channel inside my room, and I want to share it with you guys because you can do this at home. If you indeed want to trade, okay, a process, say it's my process, say it's Sam's process, say it's JC's process, say it's Cody's process, you have to do what Mark Douglas says. You have to stay consistent. You have to trade it every single time. Do it the same way, mechanical, over and over and over, and at least give yourself 30 to 45 days. Journal your results. Be a good steward of your money and continue to follow the process. Now, I will say this if the process you're using and you are following it like it was taught, if you've lost probably, I would say, 5 trades in a row, probably not a good process. Okay? Just being real. Okay? That's my own 2 cents. All right? I pushed out, I think, 4 or 5 trades to you guys. They've all been winners. It's a good process. Okay? Sometimes I lose, sometimes I don't. If you got a bad process, find yourself a new process. That's it. Okay. So allocation, stick to your rules. If you have any questions, please reach out. I'm right here in the main chat. You guys have a beautiful day. All right, guys, can you hear me? Let's go ahead and I'm gonna upload just in case you guys aren't over at Simpler, because I know a bunch of you guys came from there, but we